Welcome back. You're watching us here on Bazaar Morning Call. In case you've just joined in, the SGX Nifty indicating a positive start to kick-start things this morning itself after good global cues coming in. Let's see where we go from here. The second half more important because we'll have the FTSE rebalancing as well. So around $250 to $270 million expected in our markets. Stock that I'll be watching out for is Nykaa, mainly because ended at the low point of trade yesterday. And today we have the annual analyst meet for the company as well. But that's not the only stock. Our research team standing by with CNBC-TV18's list of top stocks for the day. First up, let's go across to Ekta. Ekta, you're watching TCS this morning.
Well, yes, I'm filling in for Rima. Well, TCS, I expect the stock to be in the red because there is a Mint report which has indicated that Transamerica has nixed a $2 billion pact with the company. Remember, it is the American arm of the Dutch insurer Aegon NV. Now, the deal is scrapped 5.5 years after Transamerica Life Insurance selected TCS. The company is probably going to complete the transition of this project over the next 24 to 30 months. Inclusive of that, then that would mean that TCS has probably worked for 8 out of 10 years of the contract. And Transamerica, according to the report, is doing this because they want to focus on insourcing. Well, we have reached out to TCS and we're waiting by for a revert from them. As of now, we haven't verified this report independently, but I do expect the stock to be in the red today.
Yeah, I guess thanks, Ekta, so much for that. Nigel, I guess it's not so much about how much they're going to lose on this deal since they worked 8 out of 10 years, they'll probably make it. But just in terms of sentiment.
Sentiment, it's negative for them. Yeah. Okay, all right. Let's hop across to Nimesh. He's standing by to tell us about Ashok, Leyland and CNBC. There are investor day takeaways.
That's right, Nigel. So I'm filling in for Sonia. I'll start with CNBC first. The management was quite confident of the CV upcycle to continue, so that was the first takeaway. The second was they're raising the domestic market share guidance to 35% in medium heavy chemicals, medium heavy vehicles from 32% in FY23. For light commercial vehicles, they've raised the guidance to 25% versus 19%, and they've maintained the EBITDA mid-teen EBITDA margin guidance as well. They expect the export volumes to double in the next 2 to 3 years, and they're focusing on the non-vehicle revenues as well going forward, which includes defense and space parts. And the last is the value unlocking will start in the subsidiary businesses. The first being the IPO of the Hindustan Leyland IPO in the second half of FY24. So that's the key big takeaways as far as Ashok Leyland is concerned. As far as CNBC goes, again, for CNBC, the management is quite confident of maintaining the market share and increasing the export volumes as well. In the two-wheeler, they clearly said they want to maintain the market share at current levels. In the PV segment, they target to increase the market share from 18 to 20% versus 15% currently, and they expect export revenues to grow to 25% versus 18% in FY23, and they want to retain their ROCE of close to 15%. So both Ashok Leyland and CNBC management were very strong in their investor day and they're very confident of business going forward.
All right, let's move on to Vivek then. Vivek, you're tracking NLC and Bharti Airtel?
Well, good morning. That's right. So NLC India, interesting development. Along what most of the power companies are doing, what NLC India too has done is they've gone ahead and incorporated an arm called the NLC India Renewables Limited to take over all of the company's existing renewable assets. Now, remember, this takes importance in the context that the company in the recent con call had guided to significantly enhance their renewable energy capacity. So what they're saying is that from the present capacity of solar that they have of 1370 megawatt, they're planning to increase it up to 5,880 megawatt. And in the wind project capacity that they have close to 51 megawatt, they're looking to almost triple it to 151 megawatt. Now, the other stock on the radar, an interesting development as far as Bharti Airtel is concerned. Now, what's actually happened is that the Airtel Africa operations is the one that we are focusing on. And within that, in Nigeria, the central bank has removed trading restrictions of the currency in the local market. And on the back of that, the Nigerian currency, Naira, has weakened by almost 29% against the US dollar. Now, this is not a totally unexpected development. In fact, in a note in May 31st, analysts had said that a forex reset is likely in Nigeria as the new administration has taken over. In fact, the market has been looking for the government's plan for narrowing the gap between the parallel as well as the official market lines. Also, Airtel Africa had guided for the kind of impact that they would see for every 1% depreciation of the Naira against the dollar. So 1% devaluation in the Naira is actually a $22 million impact on revenue, a $12 million impact on EBITDA, and a $7 million impact on finance costs. In fact, HSBC values Airtel Africa's operations in its SOTP at 32 rupees a share. Nigeria contributes close to 50% of the SOTP for Airtel, Bharti Airtel.
Okay, got that, Vivek. So we'll keep this on our radar as well. Thanks very much. Back to Nimesh. Nimesh, so many investor meetings happening. Tell us about the one that took place with Zensar.
Oh, again, Zensar had a very strong analyst meet yesterday, so the commentary was quite strong, and hence we are addressing as well. The company said this is significant headroom for growth exists. The CEO believes that the revenues can double from here as well. They're aiming to sustain the mid-teen margins as well. The couple of key businesses, which includes the verticals like advanced engineering, data engineering, as well as the analytics and platform, which contributes 35% of the revenue, those are scaling up very well. So that's the key commentary as far as Zensar is concerned. But in terms of brokerages, a mixed reaction to yesterday's analyst day. Moti has downgraded the stock today to neutral. They've retained a target price of 390, and Antique has raised the target price to 490. But within the mid-cap IT, this has been a big outperformer. So post the rally, Moti believes the upside is quite limited.
Okay, thanks a lot for that, Nimesh. Let's hop across to Ekta. She's joining in to tell us some more stocks that she's tracking. Ekta? All right. I think, Ekta, we'll come back to you in just a bit. We'll try to get that audio fixed up. But Manisha is joining in as well to tell us more about crude oil prices. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, yes, the crude oil price has gained up 3% overnight. This is, of course, after interest rate cut in China, and the dollar index declined below 102. At one point in time, it went below that level as well. It's trading at a 5-week close right now, and that has been supportive for various industrial commodities. For the crude oil prices, it also is a statement from IEA saying that the global oil demand will rise 6% between 2023 to 2028, and the UBS saying that the supply deficit is what they're anticipating in June, but could get deeper in the month of July. And with China moving as well in sense of interest rate cuts, and the key loan prime rates could be cut in the next week as well, it's something that could be supportive for the Chinese companies there. Also, the Chinese refinery output is up 15% in the month of May. This is the second highest total on record. The demand really seems to be improving on ground, and that has been supportive for crude prices. In any case, markets believe that we have touched a bottom already for this quarter, and from here on, you could be looking at more support coming in.
All right, more support coming in, higher crude. We'll watch out for how that impacts the crude users, paint companies, etc. 75.5 on crude right now. But we have Ekta back with us. Ekta, you had a bunch of stocks that you were watching.
Well, I'll start with Torrent Pharma. They've received an EIR, which means a go-ahead for their oral oncology facility. TVS Motors has sold their entire stake of around 43.5% in Emerald Haven Realty for 166.8 crores. It ceases to be an associate of the company. And lastly, Samvardhan Motherson, where it is their European arm has signed a binding undertaking to acquire Sirma Enterprise for an enterprise value of around 7.2 million euros. So these are a couple of stocks which I have on my radar.
Okay, all right. Thanks a lot for that, Ekta. Well, let's do a quick recap then of all the top stocks we just tracked for you. Stocks with positive news flow include Ashok, Leyland, CNBC, Zensar Technologies. You have Torrent Pharma in there, TVS Motors, Samvardhan Motherson, NLC India, and ONGC. Well, we have a couple of stocks that will be reacting to negative news flow, TCS and Bharti Airtel. So those are all the top stocks you need to track which will be reacting to news. But there are some brokerage notes as well that came in earlier today. Surbhi joins us to run us through that list. Surbhi?
So first one on my list is KEC International. So Nomura has written on KEC after meeting with their management. They have a buy rating with a target price of 598. They say the management expects a 15% revenue growth in FY24 and an order inflow growth of 10 to 15% in FY24. The management has guided for a gradual EBITDA margin recovery in FY24 and normalization of EBITDA margins FY25 onwards. They say lower competition from China and Turkey is helping them in the US market, and also the India T&D business segment is witnessing traction led by renewables, and the payment terms are improving there as well. They've also written on PNC Infra with a buy rating with a target price of 375. Nomura says that the KKR is looking to buy 12 road assets from PNC, and this asset divestment could lead to a re-rating. They say the deal EV implies an equity value of 2100 crores versus a book equity value of 1700 crores. and which leads to a price to book value of 1.2 times. Nomura has also written on ITC after meeting with their management. There also they have a buy rating with a target price of 485. They say for the cigarette business, the volume trajectory remains strong and the growth over the coming quarters will optically come down to mid to high single digits as the high base factor comes into the play. For FMCG business, they say the ITC endeavors to outpace the industry growth over medium term. And for hotel business, they say the divestment is on the cards and the company is evaluating various alternate structures to ensure that divestment is both cost and tax effective. And lastly, Jefferies is optimistic on the real estate space. They say the 4 landmark infra projects in Mumbai worth $10 billion is going to be completed over the next 18 months. Additionally, another $60 billion worth of large infrastructure projects are planned over the next 3 to 7 years. So this infra upgrade in Mumbai will likely flatten pricing pyramid and attract fresh economic activity. So they are optimistic on Lodha, Godrej Properties, Oberoi Realty and Suntec.
Okay, good to know at least someone's optimistic on Mumbai infrastructure. Gives us a lot of hope, Surabhi. Thank you very much for all of the brokerage notes there. We do have to take a break on that note. Coming back with lots more on the other side, Siddharth Khemka, Head of Retail Research at Motilal Oswal Financial Services, will join in. We'll discuss a couple of interesting stock ideas and fundamental themes with him. Later, we also connect with Ajit Venkatramanan, MD at Finolex Industries, and get the company's business outlook.